Traders. I am Stephen Davis, Senior Market Strategist, RJO Futures, downtown Chicago, Friday, September 1st. Here to talk to you about the grain markets. And we had a rally yesterday, so we're going to spend the next couple of minutes talking a little bit about what happened yesterday. Our first chart of corn, you can see a daily reversal coming off the bottom here. So this does have bullish implications in the short term here. A lot of times this strength goes on for 48 to 72 hours. A little disappointing, corn and soybeans are lower after yesterday's 12-cent gains in the row crop. So I want to take a stab at what I think is going to happen here in the corn market. And reasons for yesterday's rally, remember last year, August 31st, I mentioned a week ago, this is when we rallied. Looking at the chart, less deliveries in corn, very strong export sales in corn. So these are some of the reasons, the catalyst for a daily reversal up in corn. Okay, the farmer, the U.S. farmer, the last 5-10 years spent a lot of time and a lot of money putting storage on their farms. So they're going to store corn and look for higher prices. I think that's what's going to happen. North Dakota typically produces as much corn as Ohio. This year there's a drought in North Dakota. This is the worst basis in the corn belt here, the Dakotas. So the basis is going to improve, and that's going to improve price discovery here in my analysis for corn. So we'll keep talking about this and see if I know what I talk about in the weeks ahead. Okay, the soybean market, the next chart. You don't have the daily reversal up on a daily soybean chart here, but nonetheless it's up past resistance. It's going to take buying and lots of it to keep the soybean market moving higher. We're a little bit lower here today, so again, when soybeans were up 12 cents yesterday, you want to see it continue, so we'll see about that. The first full moon is Wednesday, September 6th. I noticed the low on Wednesday is going to be 48 degrees next week. That's not freezing temperatures, but we'll keep an eye on that. That's important here. Soybeans, we need a long growing season. It's still a weather market for soybean, so it's important about that. Just a little touch on NAFTA, North America Free Trade Agreement. You know, in the last 10 years, agricultural exports to Mexico have increased 64%. Last year was $18 billion of agricultural goods sold to Mexico. So, you know, $1 billion here and $1 billion there, and you're talking about real money. So this is important to keep this North American trade going in agriculture. Good for our grain markets, good for our farmers and producers. Okay, our third chart is wheat here, and you can see count them 4 days up of higher highs and higher lows. Wheat is getting really cheap. Low prices is the cure for low prices. I noticed some of the wheat prices in Kansas is below the guaranteed load rate of the government. So, you know, these acres are not going to go into wheat. They're going to go into soybeans, for example. That's what's been expanding. So we'll keep talking about that. Export sales are the key here. If we can get some exports going on wheat, you may get the same type of chart pattern on corn that we had yesterday. And the technicals are going to change here. The fundamentals are still bearish. A lot of grain in the world. So we'll keep talking about that. We're closed on Monday. Everybody have an excellent weekend.